Good afternoon, everyone. Welcome to yet another edition of Speciale Talks, right? Where that we host with operators, founders in the SaaS and the startup ecosystem to learn a lot about the challenges that they face in their daily lives and what they're building and what they're using, right? We take this opportunity to help a lot of operators, entrepreneurs, and ecosystem players to learn from such conversations, right? And hopefully enhance the ecosystem by building solutions based on these insights, right? This comes to you from Speciale Invest. We are an early stage venture fund focused on deep tech ideas and enterprise software and SaaS, right? We write check sizes of about $500,000 in round sizes of up to $1 to $2 million, the very early stage of a company, right? And invest in wide variety of technology stacks on the SaaS side as well as on the infrastructure side, right? Today's topic is about the CFO stack, right? The CFO's function and the finance function in businesses has been constantly evolving over many years, right? And from a function that was mainly using limited technology or using only Excel sheets and older technology tools is now evolved to using a lot more cutting edge technology and innovation, right? And the challenges that they face on a daily basis as companies build, scale, and operate, right, at a very fast pace for the finance function to keep pace with the rest of the organization, particularly in a high growth startup, right, is what we're going to touch upon today, right? And to talk about this, we have two amazing speakers, right? One functional expert, Karthik, who's VP of Finance at Chargebee, one of India's fastest growing SaaS startups, and a unicorn in their own right. Right? He can talk about the finance function, the background, his own career progression, and where he thinks the world is evolving. So, Karthik, thanks for being here.
Welcome. Thank you.
Conversation.
Thank you, Arjun. Thank you, Arjun, for having me.
Yeah, and Satya from BlueCopa, one of the founders of BlueCopa, they are building for the CFO stack. So probably Karthik is going to be a customer of what Satya and team are building. And Satya is a serial entrepreneur, right? He's been built multiple products on the data infrastructure side, and this previous startup being in the fintech space, and now building to solve problems for the finance function for particularly fast growth, high growth startups. Right? And they're bringing in data, technology, and infrastructure to solve these problems. So he'll have a very unique lens to talk about what they hear from their customers, what sort of innovation are they doing, and where the future holds. So Satya, welcome to the program, and thanks for joining and sharing your comments here.
Thanks, Arjun, for having me. A pleasure to be here.
Super. Maybe we'll get started with a little brief introduction from both of you and diving into what your functions are and where you spent most of your time in your careers and where you're today. Karthik, we can start with you.
Okay, sure. So I'm Karthik Srinivasan, VP Finance Chargebee. So my early days was with Tata Consultancy Services, chartered accountant by profession. Spent a lot of time in tax finance. That's where I started my career, which is why TCS was the first company that I joined. Close to 6 years there, managing the entire consolidation accounting function. Started off with a role in Mumbai and then moved on to Singapore for a couple of years. So that is how I spent my first 6 years. Then that's when I think after the 6 years in TCS is when I joined the fintech space. I joined a company called Financial Software and Systems, which is known as FSS, and my role there was overseeing the international finance operations for them. So that was a very different experience for me. Until then, it was mostly to the IT services side of it, which was at TCS. I got into FSS, it was more to do on the fintech side of things, right? So spent about 4 years with FSS, after which I moved on to a company called Olam, where I spent a couple of years heading the finance function. This was again on the ITS side, which is when the opportunity from Chargebee came calling, and I joined Chargebee in 2016. So wonderful opportunity for me, simply because it gave me an opportunity to learn, in terms of how to set up a finance function from scratch. And the interesting thing about Chargebee for me personally was the product itself was catering to the finance function, right? So it had that dual role of not just setting up the finance function, but also contributing to whatever extent possible to the product roadmap. So I think I joined at a juncture when the company really started accelerating in terms of growth rates. So every year was different, right? Since 2016, company has pretty much grown like 100% year on year. And so I was very fortunate to be through that journey, see for myself in terms of how the company has grown leaps and bounds. And here I am now managing treasury, procurement, payable side of finance, reporting into the CFO based out of the US. So it's been a wonderful journey for me, and it's been learning, and at the same time, implementing some of the learnings, not only from my earlier experiences, but also from my experiences with Chargebee.
Awesome. Thank you. I think that's fairly diverse and how you landed on this. And of course, like you mentioned, the interesting aspect is that, the Chargebee product itself is on the finance function, and you've also contributed to the product roadmap. That seems like a very interesting crossover, right? So we'll dive deep on that sometime later in the conversation. Thank you. Satya, over to you, a little background.
Yeah, so unlike Karthik, I come from a very technical product background. So most of my life I've been a product person. I worked at a company called Pramati for quite a bit early on in my career, and then in 2013 I did my first startup, which was called Tuple Jump, where we were building data infrastructure technology. It is if you know Snowflake, a little bit like Snowflake. So we built that for 3 years, kind of bootstrapped the business. The target market was the US market. So that was a time when this whole data hype or the big data hype was happening, right? So we thought we could do better in terms of the kind of technology we were building, and hence we came up with this disaggregation of compute and storage, unlike what the big data state of art tools were there at that time in the market, right? So we got acquired by Apple in 2016 May, right? I was there for Apple for a couple of years. Built their kind of what is the equivalent of Databricks inside Apple, and post that also was instrumental in re-architecting the whole metric system, right, within Apple. So that was those very unique experiences that I had, right? And also building the metric system at Apple gave me a very unique lens on what kind of tools are missing for the other side of the business. These are technology guys building tools for themselves, but on the business side, since I had run 2 companies, and post Apple, we did a startup called Optobiz, which was in a fintech space. It was a platform for tax practitioners to reconcile their GST filings and also file GST. Essentially, the idea is we would use the GST data to underwrite businesses, right? Even during that, we had noticed the lack of tools which could gather data, and since we were technical people, we were building those for ourselves. And post COVID, we had a bit of a hiccup, and we got acquired by Open. At Open also, we saw similar challenges in getting data from different tools together, right? So this seemed like a good problem to solve, coming from the metrics lens, and the kind of tools that are lacking, coming from the place where there are good tools, right, and seeing come into the place where there are no tools at the moment, right, or lack of good tooling. So that gives us a unique perspective, right? And my co-founder Raghwa and Neil has extensive ERP background, and Raghwa himself is a finance guy. He's our internal customer. So the combination of these 3 is what gives us a unique perspective into what we're doing. Right. So over to you.
Lovely. Thanks, Satya. I think the interesting thread there of how you've uniquely seen customers face this issue and non-technical users, and then adapting your core strength of data infrastructure to solve those problems in functional setups. And of course, you built a fintech startup before this, so there must be some learnings there, right? Karthik, using that strength of how functions have evolved, and particularly in your case, the finance function, right? Maybe you talk about the Chargebee journey and say, in the last 6.5 years, with that immense growth that you spoke about year on year, all right? what was the finance function when you set it up, right? What was the expectation from the finance function? What were workflows that the business expected? What metrics did you care about? And from that, where is that evolution come to today?
Right. So I think the start of what was important was to get the record keeping right. That's where all finance functions typically, want to start, right? Ensure that the basic books of accounts reflect the numbers accurately, right? So that was the starting point in terms of ensuring that we had the books of accounts in place, the housekeeping was in place. But then what happened was, as we got stronger on that particular front, it was important for us to start reporting some of the key metrics that's important for the organization. That's something that was anyway happening when I just came in. We had a consultant who was anyway doing that for Chargebee. But the intent was to take it to the next level, right? Formalize a dashboard so that the management as well as we ourselves in the finance function can look at the numbers month on month and then decipher important trends from it, right? Was the second important step. The first step was to set the books of accounts, ensure that there's accurate. Then the second logical step to that was to ensure that there was a methodology to the reporting, right? Be it reporting the SaaS metrics, looking at P&L balance sheet and all of that. It was important to get those reports out on time and also capture the most important bits. From a SaaS standpoint, I think ARR is something that you usually look at as one North Star metric. Again, depending on the business, like for Chargebee, TPV was an important metric. It was more about how much transaction value we were processing. So that was another metric that we were tracking. And then there were these downstream metrics related to lifetime value of customers, how much we were spending, CAC per customer, etc., which were also key metrics that we were tracking. But one other metric which we were constantly focusing on in terms of key metrics was look at our NRR, right? Because we wanted to see how much we could expand our existing customers. So I think pretty much most SaaS companies look at these metrics in terms of what I've just defined. But the interesting aspect to it is how do you evolve those metrics year on year, right? You start with a series of metrics, you understand their trends, but then how do you start looking at the evolution of the metrics? And which is when you start looking at cohorts, you try and understand, customers who have come in a particular year, what's their behavior looking like, right? Those are aspects that you start multiplying to what you evolved already as your basic high level metrics, right? So I think that's the journey that we took in terms of building on from what we had. And then we had the investors coming in and then also, asking for a few metrics which are very contextual to the business, right? Which we started working towards. And then I think the theme around it started building on, right? Metrics which were important to measure growth and profitability, right? Not just looking at growth, but also at efficiency was another important factor that we started baking in. The metrics like gross efficiency index, which is more to understand in terms of for every dollar that you spend, how much do you earn, right? CAC payback, right? How long does it take for you to recover the money that you spent? There was something called ROAS metric that we used to track, which is basically return on staff employed, people that you're deploying, how much are you able to recover from them? So these were some metrics that we also started highlighting as we continued our growth journey, because all of this became relevant as we started growing or moving from one stage to the next stage.
Very interesting. Maybe you want to double click a little bit about, it seems like just, as the company was evolving and growing, right, there were different type of stakeholders that were looking for more and more metrics and better visibility and insight, correct? To obviously make future business decisions, right? You want to talk a little bit about, therefore, being at the heart of this finance function, what key stakeholders do you consistently interact with? And who comes to you asking for what?
I think the first stakeholder obviously is, one, it is important for finance themselves to consume the information, right? For us to interpret the numbers, for us to understand whether the numbers make sense. So in a way, we ourselves as a stakeholder to our own numbers, right? That's where it starts. And then obviously the founding team, the management to whom you report to, they're obviously interested in understanding how the company is doing, what are the levers, where's the performance headed, how is the numbers as against the budgets, right? So second is obviously the management team. Third, you have the investors, right? To whom you have to submit monthly reports. They're also keen on understanding broader trends, not just what the company is doing today, but what's expected to happen during the course of the year, right? And also for the years to come, which is why I think the budgeting exercise becomes more sophisticated, right? As you continue moving the company from one scale to another scale, the budgeting, the sophistication of the budget also evolves, right? In year 1, year 2, the kind of budget should have prepared compared to what we've done in year 3 and year 4, be very different. The level of detailing that goes into the budgeting process continues to evolve. So that's another stakeholder, right? The investor community. I think these are 3 primary stakeholders, right? As you would look at it, in terms of whom we were actually taking care of in ensuring that they were aligned to how we were thinking about.
Got it. Also, just from a reference perspective, you want to talk about 6.5 years ago when you started, how big was your team and what does that team look like today? And just to reference, maybe you can talk about ARR levels or whatever you can share, right? Just from a scale perspective.
Yeah, I think from a team size perspective, I think I can probably talk on that. When the ARR side, I'll probably not dwell on it. I think from a team size perspective, there are about 2 of us, right? I joined, another guy joined along with me from the same company. I just pulled him along when I joined it.
Right? And was there a CFO at that time? No,
there was not a CFO.
There was no CFO. That's
CFO. So I joined him as a director of finance, reporting into the CEO, who was Rajaraman. So just me and one of the guy who joined along with me was part of another company that I'd been part of earlier. So that's how we started the journey. The 2 of us trying to put things together, build things from scratch. The team size now is about 30 plus, right? Which means it's grown a lot since then. We'd outsourced legal primarily at that point in time, but then slowly we started building a legal function. So when we started off, it was pretty much all of us doing everything. The 2 people probably expanded to about 4, 5, and then about 10, 15, and then 25, 30. That's how it expanded. So in terms of roles, it was, as I said, all of us doing everything to start with, and then us compartmentalizing the entire function to 3 buckets: controllership, FP&A, and then legal. Right. So within finance, we had those 3 umbrellas, and then we had each person heading each of these sub-functions. And now, obviously, we have a slightly more sophisticated function, the CFO coming in, where we have a chief accounting officer, we have a VP of FP&A, I take care of treasury and procurement. So that's how the team has expanded, and the scope of operations has also grown.
No, very interesting. Thanks for sharing.
Yeah.
So just switching gears to you in terms of what you're building at BlueCopa and how you sort of arrived at the opportunity itself. What you saw from your lens, both running the previous fintech startup and then doing some sort of market research to say there was a problem or there was a gap here that needed to be solved. What type of stakeholders did you interact with? Who did you learn from? Where did you go to find this problem that you are solving for at BlueCopa or the broader industry segment that you operate? And maybe just to get kickstart that, you could talk about what is the segment called, right, in industry parlance. All right, what is the definition there, and what is the tag there? Satya, you're on mute. Sorry. Satya, you're on mute.
So we'll take a step back, and I'll tell you how we discovered this problem, right? So in one of the previous companies we were working in, both Raghav, all 3 of us were working in, we had noticed that there's a lot big exercise around budgeting which is happening, right? And at the end of the day, after all the exercise, things were definitely not going to whatever was budgeted for or whatever the goals were, etc. Right? So the lot of variation, right? And it seemed like the finance guys were overworked all the time, right? Yet we were seeing a lot of gaps in, like, budgeted for, we were not able to get that budgets, and we had to redo a lot of processes, etc. So we saw there was a problem there, but we didn't think too much about it. But once we took a break and came out, and we started questioning as to why this thing was happening, and why is it that these processes are broken in scale-ups to begin with, right? And then we started talking to people across different segments, right? In startups, it's much more manageable. Scale-ups is when, the belt starts to break, right? Where things start to go haywire, and which is where, finance talent comes into into the company, into the organization, right? When we started talking to people across the globe, VP of finances, CFOs, etc., we started discovering that the tooling with which, their the finance organizations are today dealing with is kind of still not gone, that not gone into that digital transformation 2.0, as we call it, right? And if you take the sales function, or if you take any other function, of course the engineering function goes, leads the way. But after that, the sales function has gotten a lot of tools, operational metrics and operational planning around sales, etc. This has become fairly sophisticated now, right? But the finance, which keeps the overall top level view of the company, they're kind of still operating with a combination of BI tools, a combination of accounting software, and sometimes ERPs, sometimes not. For example, like, organizations which are born, let's say, after 2008, the adoption of ERPs has been fairly slow. The reason is that cloud started picking up at that time, and everybody went and started picking up SaaS tools. Right? Chargebee is one example of a tool which is, which has taken that wave. So the sources of data has now, like, it's kind of very disparate. It's spread out in systems. Right? What the original function of ERP was, which is that, get all data together in one place, so that, then I can use, a combination of a. Now that gets me to the point. What was this originally called? What was this segment, originally called? It used to be called EPM or CPM, Enterprise Performance Management or Corporate Performance Management, right? So, and financial reporting, right? So these are the two aspects, right? Which we combine in BlueCopa, right? So these two things used to be built on top of ERPs and were the particular ERP centric. Suppose you chose Oracle, it was Oracle centric. You chose SAP, it was SAP centric. So now that the data is now spread over all different, the functions are moved out. HR function has moved out. Order management function has moved out. Sales has moved out of the ERP. ERP has become very accounting centric. So it becomes the month end sink of data, not the source of truth for data, right? Do you chime in with those observations, Karthik? Is that how
Yeah,
you
would love
see
that.
it?
Would love to hear what you guys were using and are using, and would you concur and agree with those challenges?
Yeah, see, if you look at it, right, in terms of how we progressed on this, so start off with, at least from an accounting standpoint, we started with Tally as a tool which we use for accounting, right? Then we looked at QuickBooks. QuickBooks is where we did a lot of it in terms of, and we looked at QuickBooks till at least almost like 2020, almost like 3-4 years using QuickBooks. That's when we migrated into NetSuite, right, which is a full-fledged ERP solution, which is what we use for our accounting even today. Yeah, so while accounting was something that we were handling through QuickBooks and now through NetSuite, we're using a different system for budgeting, right? So we use Adaptive for budgeting today. And then obviously we're contemplating a new solution for procurement. This is a solution that sits aside for our HR management system, etc. So I think, yeah, one of the things that is always a challenge is how do you make all these different systems talk to each other, right? Because you just want to ensure that the information flow is consistent, right, across all of these subsystems. And I think that challenge remains irrespective of the stage that you're in, right? Because what also happens is as you keep growing as a company, the level of complexity in terms of what information you need also keeps growing. There's never a satiation point, right? What would have been relevant to me probably 2-3 years back is probably different today. So this journey is a little hard, right? In terms of always keeping these systems talking to each other, ensuring that this consistency in data is something that everybody wants to address as a challenge. And the reason it's complex is because that challenge keeps hitting you every time as your business becomes more complex and your growth, as it is different at different stages. So, yeah.
Yeah, no, that's very interesting. Maybe just a follow-up question to that, Karthik, to say, hey, are you, you know, to be on top of this and to have a consistent flow of information and data that is highly accurate, I'm assuming you're working with a bunch of technical engineering teams, correct? Is there a dedicated engineering team? Was there one, or is there one today that supports the finance function?
So we have a couple of ways we're addressing this, right? So today we have a business intelligence platform, which is where we use a solution like Tableau, where all of the information relation to a metrics, etc., is actually being funneled into that solution, right? So a lot of the visualization that we want to see in relation to our own metrics, etc., is all funneled through Tableau, and Tableau is the tool that we use for going through a lot of information that we want to observe. But other than that, so that tool is again written by a business intelligence team. There's a BI team within Chargebee who exclusively spends time ensuring that that solution is up to date. All of the pieces of information coming into that solution is accurate, right? So there's an exclusive team that works very closely on that particular part. In addition to this, for all of our internal tools, right, wherever we need, like for example, Chargebee by itself is a source of information, right? There's a whole lot of information sitting within Chargebee. A lot of it goes to Tableau as well. But then there are other needs for that information in terms of, let's look at it from how we want to correlate our budgeted numbers, which is sitting in a slightly different platform, or accounting numbers, which is slightly different in a slightly different platform. And then what comes through from Chargebee, right? And this is where there's a internal BizOps kind of a team that we have, which we call as EBS. The intent of this team is to ensure that the information that has to be collated internally between these subsystems is consistent and is projected accurately, right, in terms of how we want to observe it. Right. So there are two different teams with different purposes, but the intent is basically to ensure that the data that we have to consume for our own needs is accurate.
Interesting.
Does that answer your question?
Yeah, that's helpful. That's helpful. The one thing that I'm picking up, it seems like, you got to play the role of sort of a product manager to say, hey, this is what I need and help me get it in this form and in this workflow. And that's one, Satya, maybe, you should chime in to talk about.
Yeah.
Now it seems like you're building BlueCopa and you're the product manager for all of these, people who are going to use it and trying to understand their needs and then trying to build the most optimal solution.
Right.
So you want to talk a little bit about how you've thought about the complexity and how you've gone about solving this problem of data consistency, data accuracy, and availability.
So let's try and dig into the theme that Karthik has shared. Right, there are two pieces that which chime with us very well, and we understand that from our conversations with other people as well, is that there is a continuous evolution in the kind of metrics, right, and KPIs that companies need, right, and that in turn begets challenges of for data teams and the business ops team that Karthik was talking about, right? And that's when, like, each question you need to ask, each new metric you want to ask, the turnaround time to track that starts becoming larger and larger, right? And the other theme that Karthik talked about is, as we evolve, as you evolve as an organization, you want to become more sophisticated in terms of the kind of deeper level of metrics that you want to talk, right? I just want to just touching upon what is the metric, what is the KPI. This KPI these are kind of terms thrown around loosely, but just for kind of setting the stage here, KPI, we like to think of KPI as a strategic goal, right? Which is your high level goal. What is your the things that you aspire to year after year, right? I want my net revenue to increase, right? I want for in e-commerce, I want my GMV to go up from this place to, some other place. So these are KPIs, but metrics or operational metrics, as you can call them, they are much lower level, which can then be used to influence. By tracking them and improving them, you can then in turn improve the KPIs, right? Example of a operational metric is day sales outstanding, right? You improve that, right? Your cash flow improves, right? So it is like, one acts like a driver, one acts like the lead indicator of where you're going. Now, as the sophistication increases, the drill down level of these operational metrics, right, and hence the granularity of the data that you want to bring into a BI tool, or a data engineering team, right, that starts becoming more and more complex, right? And now you see that as you evolve, this problem becomes more exacerbated, right? So that is our realization. And that is challenge we want to solve. And today the challenge is actually being solved by Excel, right? Karthik, you might chime in there, right? Where Excel is the the tool that evolves your function at the moment, right? As you get, and then the other systems will follow.
Correct. There's always that element of the spreadsheet actually working as that the middleman, right? Wherever you feel that you don't have something that actually brings all of it together, the spreadsheet is what comes to your rescue. Yeah. Right.
So and the challenges with the spreadsheet is right. It is not a repeatable thing, right? And you can make it repeatable. You can write a macro, right? But then you're dependent on the person who wrote the macro. You're not dependent on the Excel sheet. So that becomes more and more thorny, right? So and it's a disorganized set of Excel sheets, etc. So people in the engineering side have had more sophisticated tools to do like version control, like a metric system which keeps track of what is happening around, right? And those metric systems are built generically so that you can actually track newer and newer metrics, right? You can push in data, you can that becomes a source of truth. So all of these things are kind of absent at a business level or a business finance level, right, today. So I'll pause there and see if you have more questions. So that's how we look at the problem, to summarize.
Got it. No, I think it's very important to understand the strategic value of the KPI/key metrics. And then, of course, decision making and changing things within the organization is to identify which are the levers, is what you're saying. And those are the business operating sort of a metrics where you are able to, and then, of course, some visualization layer that enables you to draw those insights in an easy format. Yeah. Correct. So now I think I want to pick up on a couple of things both yourself and Karthik mentioned and say, hey, this evolution of more and more tools from disparate systems and therefore data generated. Correct. So there is two levels. One is more disparate tools, correct, that are tracking various metrics, right, or measuring various things. That sources of data multiply as a company scales. Second, the volume of data from each of those also, non-linearly sort of, goes up, right? And those, if you put both of those together, then you are really dealing with a heavy level of complexity. For me, one of the key trends that I keep hearing that finance function and most functions these days care about is being more in tune and everything being more timely, and therefore things being more real time, right? Yeah. And that again, I would imagine would have a lot of interesting challenges. So maybe both of you from different perspectives want to talk about how from a few years earlier to today, right, the emphasis on the recency of data and the currentness of data, right? And of course, along with that goes accuracy, but just talk about that aspect.
Yeah, I think goes without saying. I think you hit the nail on the head, right? And you said that information is useful, right? Only when it's timely. You don't want to see metrics for this month coming up next month, right? So it's important to compile the metrics in a timely fashion. And I think that the deadline for that, right, only becomes harder as you keep maturing as a company, right? You want to kind of ensure that you pull that deadline to something which is like first day of the following month, right? Is where you want to get to, right? So this month's number, I want to see it probably the first day of the following month. So that's the kind of
And you
visualization.
want to use an example and saying, hey, 3 years ago, we were okay with living with some data so late, and today it is so near term.
No, look at your SaaS metrics itself, right? Whatever SaaS metrics you publish, your ARR and all these numbers. It's the various stages at which you look at it, right? You start off probably okay, looking at it by the 5th of the following month. But then what you realize is you not only want it by the 5th of the following month, you want it by the 1st of the following month. Not only that, you want to start probably looking at it every day, right? So that I think is a classic example of how you can, progress from looking at a data point a week after the close of the month to almost looking at it like every day. Here is a classic metric. Most of the SaaS metrics, right? You want to be attuned to it. You want to look at it day in, day out, just to see what course corrections you can make. Because some of these North Star metrics, if you pay close attention to it, you can actually even do some course corrections during the month.
Yeah, before the month ends, you can improve and you can hit your target or exceed your target or something for the month.
Absolutely. Imagine a situation where you're having a lot of customers churning out, right? Something that you want to catch up front, right? Why are they churning out? What's influencing the churn? Can I actually do something? Can I do a course correction? Figure out the reasons. So goes without saying that deadline is a very key component, at least from a finance standpoint. We keep improving on that deadline or on that timeline just to ensure that we get information real time. As you said, accuracy is also a key component.
So
Satya, from your perspective, the challenges here from a data infrastructure perspective, how has the world evolved? And, are we, at sort of the holy grail? Are we at the right? This is the time to solve these problems.
Right. So this requires a historical context, right? We'll start with what has happened, how people used data, etc., and all of that, right? Beginning of computers, if you start with there, people used to keep things in files. Then we got record structures. Then we got databases, right? And if you see the original ERP vendors, like the Oracles, the SAPs, they were originally actually database vendors. Right. So the challenge has always been managing that data, right? So it has happened like that. Now, after a while, the cloud started becoming a thing, and now systems are out, right, of their core. It's not in a one system anymore. So the ERP vendors have not seen great adoption after a particular point in time. Roughly around 2008, until which point like ERPs were where you would go to, and ERPs were the original EPM vendors as well, right? And the in terms of, see, if you have things in a single system, right, whatever recency of data you wanted, you can get it, right? It's not that the old tools were bad or anything of that sort. It's just that the new reality is that for different reasons, functions have moved out, right? Because the ERP couldn't scale the function, right? It might have actually scaled the information organization and the recency of metrics, etc. But for other reasons, the sources of data have gone out, right? The other thing that has come up is this whole data lake where people are throwing information, or like just throwing data into a big data lake, hoping that someday some tool will come and help them extract value, or some brilliant data engineer will help them extract some value, right? And this whole thing has made a big complex mess of systems, right? If you want to build a report, right, reports that Karthik was talking about today, it starts from how your database needs to be, how your warehouse needs to be designed, right? Although there is some improvement there, it starts from there. Then how do you ETL the data, right? How do you structure that particular table for that particular report, right? All of these are fairly challenging, right? So the data engineers have become a key critical role in every growing function, right?
I think like how Karthik was talking about Excels being the middleman, but people handling the Excels and handling these
Right,
now data
right,
lakes and querying,
right.
right? And again, if you need something hourly versus if you need something daily, all
So
right?
yeah. So
Yeah,
I was talking to an old timer, right? A person in his, early 60s, right? So, what he was telling me was he misses how he could do everything with his ERP, right? So,
interesting.
and the other thing he's very surprised about is, we were giving him the example of one of our customers who's a e-commerce marketplace, right? And they do a weekly P&L, and he is very surprised. For him, a P&L is a quarterly exercise at the very. So it's for him it is very
Yeah, maybe
surprising.
let's talk to the finance expert and say, hey, what's the magic or what's the value of doing a weekly PNL? Do you guys do that? And is that a recurring theme that you're seeing in the industry? Has it come to that?
It's not really come to that. I think PNL, at least at the stage that we are in, we obviously look at it, once a month just to understand
Sure.
where we're doing in terms of profitability, etc. I think weekly PNL is yet to take off, but I think the leading indicators is what we want to see, right? PNL is more of a lagging indicator where you want to look at things after the fact. The
Sure.
leading indicators is where companies want to focus a lot more. And that's where you want real-time data, right? Anything that goes into talking about growth, talking about the factors leading to growth is what companies want to focus. And which is where it comes to Satya's point, right? We're looking at real-time data. Some of the examples that he gave in terms of how ERP is being looked at. These are the leading indicators are the ones where people want to spend a lot of time, right? They want to understand, okay, if like again from a SaaS standpoint, if you're looking at number of customers coming in, how many freemium customers got converted into paid customers, how's the funnel moving from a marketing standpoint, right? How many NQLs are getting converted to SQLs? Those are things that you want to really have day in, day out, right? In terms of being able to visualize, right? And that's where the meat of the problem is. When it comes to a P&L or balance sheet, I don't think the problem is as compounded as that, because that still becomes more of there's got a statutory flavor to it, right? A P&L balance sheet as compared to.
Yeah, although in this case, I believe they're, since it's a e-commerce company, right? For them,
Correct.
COGS component is a fairly large component, right? And
Correct.
the turnover in a week is fairly large, right? So the recency, the frequency at which you do this, this PNL kind of an exercise, if you think it's a pseudo PNL, if you will say.
Pseudo PNL, yeah.
Right?
Probably that's the way you want to term it. It's a pseudo
Right.
PNL, which is not necessarily a statutory PNL.
Correct.
Just to get a sense of, okay, how much revenues come in, what's the likely cost, right? Something like
at
that.
a warehouse level or by a product line, those kind of drill downs or those kind of slices and dices are becoming very important for them, because the cash turnover is fairly large.
Makes
right?
sense.
So that is some of the things that we're seeing. So the old timers are surprised with the recency and frequency that you need of data, right? The technology itself has become like inhumanly complex. There's so many moving parts, right? And this is, and the original promise of ERP is now broken. Like somebody has to get that back, right? And
in a way, I think this is the unbundling of the entire ERP over the years.
Correct.
Right? For, of course, efficiency and for speed and companies being nimble and be able to move fast, as opposed to, a small / growth stage startup having to implement SAP. Right? That just sounds like a gargantuan effort and, does it make sense? So that's why it's fragmented. But now again, then there is value of all the data from all those things being centralized and being available sort of at, and queryable. So that's what is sort of a layer that you are trying to solve for, right?
And to go slightly deeper, right? We are trying to solve the day-to-day operational problems for finance teams, right? And see, exception matching, right? Exception reporting. Essentially, if there's a vendor for whom I paid this much this month, and the next month the cost shot up drastically, or there's a customer who the trend is that I expect X dollars a month, right? But this month, it suddenly dipped, right? And did the customer churn? Did he not churn? Like, all those kind of like day-to-day exception reporting, alerting around that, those are things that we bring to the fore by sitting on top of this data. So we do solve the problem of integrating all of this data into a central place. And B, we give a Excel kind of an interface, right? Where people are much more comfortable and they can do their pivots, they can do their analysis. And thirdly, we do reports and statements, right? Which are the central pieces that that finance teams interact with day to day, right? And alerting around those things, right? If alerting around aggregate level, group level, or transaction level, exceptions that happen. Okay. So those are the use cases that we are solving for.
Got it. One thing, as we have, of course, come to sort of real time, as current and recent as possible, right? What's the next level of innovation here? What is the demand from businesses and leaders and key stakeholders? What else is still unsolved for that's a crying need today, right? What happens next? Maybe in the budgeting side, maybe in the reporting side. How much more can this be stretched to the limit? Karthik, from your functional view, what are you stretching towards? Hey, if you are able to do something in, let's say, in the next 12 months, what would you focus on as in improving the overall system?
Yeah, so a couple of things, right? I think to answer your first question, short term, I think one challenge that most companies have is understanding the root cause, right? The root cause analysis is one significant problem, right? Most companies have, like, you have a budget, you have a number that you've actually achieved. The actuals is different from the budget. What's causing the difference? How granular can you get to understand the root cause, right, of a particular variance is a challenge most finance teams have, right? And again, as you scale up as a company, the complexity of this only keeps growing, right? And this is a very important thing to understand, because the earlier you can get an insight into this particular aspect, you can then fix the fundamental issues, right, in terms of what's driving some of these things, right? So to me, as a finance function or as an organization, one of the key things that we want to focus on, at least in terms of what we want to look at short term, is getting as granular as possible to understand variances, right? So that can also then pave the way for how we reforecast our business, right? So today, the certain budget with which you're running our business, if we can have a real assessment in terms of what's really causing that variance, can it help us revisit some of the assumptions, right? And then prepare ourselves better, especially in a situation like what we are all undergoing today, right? The current economy, where there's a lot of uncertainty, right, in terms of what is to come. It's very important to be right on top in terms of understanding the key drivers to your business, right? What's working, what's not working. I think you need those answers in a jiffy, right? So to me, any automation that can actually pave the way for this, getting to that root cause analysis, is really something that every finance team would love to have. So that's for the short term. I think long term, it's more about, a lot of people talk about predictive analytics, AI. How can you use some of these functionalities to further enhance your ability to budget, not just for the current year, but also for the years to come?
So I think you're mentioning a couple of points. One is budgeting is at the core of both of those, right?
Both of those. Absolutely.
One is, of course, budgeting and what is the delta between budget and reality, right? And plan and reality, and then identify the solutions to bridge that gap. Absolutely. The second is going forward, do better budgeting or better prediction. Right? Absolutely. So that the gaps are reduced, and then it sort of becomes a feedback loop cycle on a continuous basis.
Perfect.
Interesting. Satya, from your side, building these solutions, or first you want to comment on this?
Yeah. Just to chime in, Karthik, I think, is emphasizing about the granularity at which you can find out the variance, which is, in other words, finding out the root cause. That's the central tenet which we are operating with, and that's the system that we want to, we are building. And that's a key ask from everyone, right? If there was this variance, what caused this variance? And since this is a group buy and a rolling and a slice and a dice, right, the system can actually do this automatically, right? So that's coming features in our platform. You can get auto insights about why the variance has occurred, right? In the we give you an early warning that this exception or this variance has occurred, right? B, why did the variance occur? that what is the lead, or what is the um, what's the biggest contributor to this variance, right? Those are things that we can easily provide. So the business finance person can just immediately go and take action around it. That's the central tenet that we are building the platform around. The other thing that I see as an upcoming trend is what again Karthik said, about how can you get more sophisticated forecasting, right? At various granularities again, right? At various granularities again. Even forecasting itself has, like, at multiple levels, you can forecast more sophisticatedly. There are very new good techniques, right? The predictive analytics or AI, these are things which are used to indicate that you can get better forecasting, right? What people talk about predictive analytics or whatever is like, you want better forecasts. That's the central tenet, and you want more sophisticated forecasts, which can account for a lot of seasonality, etc., right? So those are the things that are you know that are going to drive the businesses going forward as we see it.
Makes sense.
On the technology side, right? Very new techniques, like this, just a 4 year approximation of what the seasonality has happened like for quite some time, and this has not really flowed into the finance side or the business side, right? That is something we see happening fairly fast.
Interesting.
Right? And in the very long term, right, in the horizon, it is, the view is that finance should become kind of autonomous, right? Companies should kind of think about it this way, that it all the things that can be automated should be automated, right? That's when we can bring out the maximum productivity or efficiency for or growth for the organization, whatever sector it may be in.
And I'm assuming, Satya, the other advantage the solution like yours can then bring in is for teams who want to build a kind of a financial model, right? This will kind of pave the way for it. Because a lot of teams at times might struggle to build up a bottoms-up model, right? A top-down model is fairly easier, but then building up a bottoms-up model will need a lot of this information flow to come together, right?
Correct.
So I'm assuming that this kind of an analysis in terms of getting to the root cause will help in building that financial model bottoms up.
Right. Yeah, absolutely.
Yeah, I think that both all very interesting points. And for me, this is therefore, at the heart of what the world is now more and more calling, it's all strategic finance, right? And not just on, it is directly correlated to the core business of, of the company, identifying the key levers and identifying the ways that you can enhance productivity, efficiency, and then therefore margins, and therefore the overall health of the business, and to drive those as opposed to reporting, accounting, fiduciary duties, which are of course now fairly standardized and well taken care of. But being proactive and then predicting better, budgeting better, and then identifying gaps, right? And it seems like in general the CFO's profile and role is becoming that much more strategic over time.
Yeah.
Right. And I think it would feel like that is almost impossible without the use of, really sophisticated data tools.
Yeah.
Correct. So that's very interesting. Maybe just to delve on that, and Karthik, you want to talk about when you got your CFO, right? And from an organization evolution perspective, what's the right time for a startup that is still growing to think about, hey, is it too early to get a CFO? What is the right time to get a CFO, and what delta, value does, strategic finance function add to a business at that point in time?
Yeah, I think the sweet spot is probably when you you cross that 30 to 50 M mark in terms of ARR is when, you start looking at bringing in a CFO, because that's when you're pretty much ticked off all of the boxes in terms of becoming a really large company, right? You've grown beyond that infancy stage, and you're up, you've grown to a stage where you're ready to take the world, right? So which is when you want to bring in the CFO and ensure that he builds a strong foundation from there on, so that the company is staged well to go public. So it's that sweet spot around 30 to 50 M, right? From a Chargebee perspective, we had a fractional CFO coming in at that 50 M mark, right? And then we had a CFO join us early this year in terms of taking a full-time role from the fractional CFO and taking it from there. So yeah.
Got it. Satya, on your side, adoption of tools, focus on data, availability, observability, etc. Correct? How early should companies think about it, preparation-wise, and being proactive about it? How do you see, in general, your recommendations, and who's your ideal customer also for your platform and related platforms?
Right. See, as soon what we've noticed from our conversations, what we've understood from our conversations is, it could be the top line number, which is 50 M, as Karthik pointed out. But B, it could be for companies who are just focusing on growth and not revenue, for example, right? It would differ. So it's mostly around the Series B stage, right? Is when you might want to start investing in tools which will help you pave the way for better growth and a more predictable growth, right? And where you don't feel that suddenly everything is coming off the rails, right? So that's been our, we are too early to make recommendations for this, right? But having said that, this is a sense we have got from other people, and this is where most of the inbound is coming from.
Interesting.
Right, but sudden, it is almost like this, right? You would know when you'll need it. It's almost like people are overwhelmed and then asking for it, and that's when there's an inbound for us usually.
Yeah, I think it's an interesting point that Satya mentioned, right? It's difficult to predict when people need it, but usually people need it when they feel that they're fairly settled in terms of what data they want to look at, right? When they have a fair sense of the length and breadth of data that they want to look at, is when they want a tool to actually start talking to it. So yeah.
Interesting. Got it. Does that also mean, therefore, Satya, in your view, you could use a proxy of have they implemented a data lake or some sort of certain data infrastructure already, or it doesn't matter, we'll plug into whatever you've got and we'll get you going, and the more sophisticated it is, it's anyway overarching system will work.
Yeah, so it's not about whether you've adopted a data lake, whether you're at that stage where you like whatever Karthik pointed out, right? That you're not able to even get the value out of the data, right? That you already have. That's probably when. And the other point is, just to add to what Karthik has said, the other point is when processes seem to be going off the rails, right? That's when exceptions start happening much more frequently. Is when you will start realizing that you will see what is happening is, it is a combination of people and processes which are the band-aid in the transition phase, right? Which is the glue, tape or whatever, that particular band-aid at that particular process. That's when people start realizing that either they need a ERP or they need a tool like ours, right? So that's, and it's not about data lake or not. Like, we do help people get going, with, because our technology in itself is, like I said, right, historically ERP vendors were database vendors. We have a core data calculation engine as a technology itself, which can then take in data from other sources. So that's kind of the internal IP, like, on top of which you can do Excel kind of formulas, etc., right, which are then adopted for finance use cases, so to say.
Got it. Very interesting. I think we're at the top of the hour plus, I guess, right? A lot of interesting insights here of how this has evolved, how to think about metrics, how metrics can be valuable to decision makings, right? And of course, then the tools that are needed, and are we there, or we need a lot more, right? And of course, you guys are building and in the thick of things, right? Any parting thoughts about how you see the function evolving? What do you see the future having? Or how excited about are you? And maybe Karthik touched upon a little bit, if any, in these tough environments that we find ourselves in today, right? Is there any other angle that maybe we've lost touch of or we've forgotten about last few years that has come to the fore? Correct. So just a little open-ended parting thoughts, ecosystem, tech, and use cases.
I'll take a stab at it first. So I think goes without saying, right? The current environment clearly shows that there's a balance required between growth and efficiency, right? You're using the word efficiency a lot more now, right, these days, compared to what it used to be.
So including from VCs like us, which
really? Something that you never used to hear, right, a lot. There's always about growth, right?
Yes.
So now that efficiency is also something that's being talked about a lot. So it's important to also look at metrics more holistically, right? So earlier, the focus of, even the metrics that I spoke about initially was more to do with the revenue side, the metrics. Now, I think the efficiency metrics are also like creeping in. Early stage, you want to start looking at some of these metrics, trying to understand, if there's sufficient runway, whether the business can actually stand the test of these difficult times. So that's another thing that's evolving, right? In terms of how the entire, obviously the valuation and methodology is also probably evolving, right? In terms of how you start looking at it. But then added to that is how the internal reporting is also evolving, right? Because as much as the valuation is evolving, the internal reporting also needs to evolve. So that's another interesting aspect that's expected to come through, right? In terms of this entire ecosystem going through a little bit of a change in terms of how each of us start reading numbers, evaluating numbers. So systems will also need to be built accordingly, right? Catering to some of these needs. Some of the recommendations should also probably take into consideration some of these nuances. This is how I see
a little more flexibility, I guess, from the system side, so that the key stakeholders can get it in different ways, right? I think we've not seen something like this since 2008. Right. Is vaguely my memory, right? And that's a very interesting point of how key levers will be identified and which are those.
Correct. Absolutely.
Very cool. Satya, your thoughts?
So I'd also kind of, efficiency is something we are hearing from customers quite a lot. That's one of the reasons they want our solution as well, to find out where they can get the efficiency. But on a broader perspective, the whole finance function or the CFO function itself, right, is taking a turn where they will be able to talk and derive value out of a lot of data and actually be the architects of growth. Where can you find that new growth avenue? Is the CFO will have the best, the CEO might have a gut driven insight into it. The CFO function or people in finance will have the data driven insight into what can drive the new growth, right? That they can see the trends much early. Those are the things that they become these value architects where they can find new value, right, for businesses. That's at least people who are growing in growth stage or close to IPO or like public companies. That's how we're hopeful that this function,
No, I think that makes a lot of sense. I think the CFO function, being that much more critical, right? Having a bird's eye view, having a very data-driven, logical view to what the future of the company, could look like, make very strong recommendations, and therefore being right at the heart of things and being strategic is the future. And of course, to enable them to do that, you need more and more sophisticated tools. You need better infrastructure. You need data, correct? And that directional view is very clear. Of course, I think there's a medium to long-term thinking of how machine learning and AI on top of all of that will make things even more proactive, even more dynamic, and we'll wait to see some of that built into both your systems and processes, and in Satya, your case, into your product, I guess, at some point in time. Very exciting. Thanks, Karthik and Satya, for sharing your insightful thoughts. Hopefully, this is very valuable for the audience. Just a shout out to say they're both accessible on LinkedIn. And if people have questions, if people are building in the domain, right? Of course, BlueCopa, very early stage company, also maybe hiring or scaling up at some point in time. So you can reach out to Satya for more insights and in general to stay in touch. And Karthik also for continuing to build what is one of India's best and fastest growing SaaS companies, Chargebee. Right. Thanks everyone for being on this program, and special thanks to Karthik and Satya for sharing your thoughts today.